Hello and welcome to the look ahead for Thursday, the 31st of October with me, Fiona Sincota, Senior Market Analyst at City Index. So kicking off with overnight, we're going to be watching the interest rate decision from the Bank of Japan. Also have Japanese retail sales and industrial production figures in focus. Australia retail sales are also expected to be released. In the European session, watching out for inflation figures from the Eurozone and German retail sales. In the US session, US initial jobless claims and core PCE, the Federal Reserve's preferred gauge for inflation. Lots going on. Also got earnings coming through, Apple, Amazon in the US and Shell in Europe. So let's just kick off with Apple, with what to expect. EPS is expected to come in around $1.59, and that's on revenue of $94.2 billion. The results are going to be focusing very much on iPhone sales. That still remains a key driver of revenue for Apple, particularly since we've had the latest iPhone released with Apple integrating its Apple Intelligence AI into this latest model. So sale numbers will be watched closely, and also in China. So demand in China is going to be closely eyed, especially after third-party data surrounding Chinese sales. It has been mixed. So as well as that, we'll be watching out for Apple's services sector, which continues to post strong gains. Now we've had a positive start to big tech earning from Alphabet yesterday. Be interesting to see whether Apple is able to continue that. This is the share price that we're looking at. It's trading just off the all-time high, which was reached initially back in July. Also seen it almost pretty much test that again in early October, just hovering around that. I mean, we've seen a series of higher highs and higher lows from that mid-April start to the rising trend line. Buyers are going to be looking to take out that level, that all-time high, around the 230, just above the 235 level, 237 in fact, in order to continue pushing the price higher. Natural target would be 250 on the upside. Just as far as downside is concerned, a support here immediately at 227. That's the 50 SMA. It's also the weekly low, last week's low. Then below that, you've got this level here, which is 222, which is the 100 SMA, the rising trend line, and also the October low. So if we get a move below there, then that would create a lower low, changing the structure of the chart and opening the door to the September low, which was here down at 213. Just whilst we're talking about earnings, just a good idea to take a look at what's going on in the Nasdaq. As I mentioned, we had Alphabet come out with impressive earnings, thanks to AI investments, which are now starting to bear fruit. And that's helped see strong growth, particularly in the cloud business, which is closely linked to the AI investment. So this is the Nasdaq. It's trading within this rising triangle here. We've got the all-time high at 20,750, and that's what investors are eyeing at right now. That's where the line in the sand is. And rise above that is, or could see, sort of a move towards 21,000 and up and away to 22,000, etc. On the downside support, this is the one that I'll be looking out for. It's just below the 20,000 level. That's the low that we saw last week. Below that, you've got the October low, but 20,000, I think a move below that is going to create a lower low. So then we've also got plenty of data. Now, I think we're just going to look first at USD Japanese yen. The Bank of Japan is expected to leave interest rates on hold when it meets today, this afternoon, this evening, in fact, later tonight. So there had sort of been, expectations, or, that the Bank of Japan could be adopting a little bit more of a hawkish stance to monetary policy. That's what helped drive this move here, along with expectations of a more dovish Federal Reserve. We've seen an abrupt change there. Obviously, we've had these strong data from the US recently, which has suggested that the Fed may not cut interest rates as aggressively as previously expected. And also the Bank of Japan have hinted that actually they might not be in such a rush to start hiking, sorry, not start, but to continue hiking rates either. Also, we've got this political uncertainty in Japan after the election at the weekend. And so that's not helping the view. I think with increased political instability, the Bank of Japan are going to be less likely to feel comfortable hiking interest rates. So I think we are expected to see a hold from the Bank of Japan. Bank of Japan like to surprise, so always stay on your toes with them. But just having a look at what this chart is telling us, we've seen the extended recovery from the low there of 139.50. We've risen above the 200 SMA now. We've also risen above this rising trend line, which actually dates back to 2022. Just trying to get above it, and also this level here, the 61.8% fib retracement, which is around the one just below the 154 level. So I mean, that's the level that buyers are going to look to take out now in order to open the door to 155 round number on 157.15. That's the 78.6% fib level. On the downside, just look out though, this is getting towards overbought territory, so we could in fact see some consolidation at this level. But sellers would need to take out the 200 SMA at 150, 155 in order to potentially gain traction towards this level down here around the 146.70 level. Other one to be watching, Euro US dollar. As I said, we've got inflation data from the Eurozone tomorrow. Inflation is expected to creep higher up to 1.9%, up from 1.7%, I believe. Yes, 1.7% annually. Data comes after GDP data today in the Eurozone was actually stronger than expected, double what it was expected. It rose. The economy grew 0.4% in Q3. That's stronger than the 0.2% expected. Germany avoided a contraction, which was a bit of a surprise as well. So I think the data, I mean, we know that growth has been on fragile growth, and concerns about growth have been on the ECB's mind as they're sort of more comfortable about the inflation outlook and are shifting their focus towards growth. The data has seen the market just rein in expectations of a 50 basis point rate cut at the end of the year, because the market was a bit split on whether the ECB may cut by 50 or 25, but we've sort of had a slight shift towards the 25 basis point cut. And that's what we've seen, this recovery in the euro heading up towards the 200 SMA after it rebounded off this rising trend line that we've seen across the year. 200 SMA is there at 108.70. That's the level that buyers are going to need to take out in order to bring 109 into focus and start extending that recovery towards 110. As far as downside is concerned, if we get softer than expected inflation and we get stronger than expected US inflation, don't forget I said core PCE data is also due out, then we could see a taking out of the level, this rising trend line that has been in play, and also the 108 levels. So they're the support levels to watch on the downside. Could open the door to 107. Then what else have we got going on? So yeah, let's just have a look also at gold. Gold has been trading at record highs. Just keeps going up and up, gold. Here we go. So it's trading at a fresh record high, just below 2,800. If we get data, so we've got US data, as I said, in focus tomorrow. We've had the stronger than expected US ADP payrolls in today, which came after weaker than expected jobs opening. So there's a little bit of mixed messages as far as the job data so far this week. We've got US initial claims, which are due tomorrow and expected to show initial claims rose to 230K. So we're seeing a slight increase potentially in jobless claims, which could support that view that we're seeing a little bit of weakness in the jobs market, but not in ADP payrolls, which were considerably higher than expectations. So, and they do tend to be a lead indicator for the non-farm payroll report on Friday. But anyway, gold is continuing to push forward towards fresh highs, supported by, we've got a little bit of weakness in the US dollar today. But broadly speaking, central banks cutting rates that's supportive of gold. Gold is very much overbought at the moment, so buyers just be cautious. As far as downside support is looking, 2,700 could be a level to be watching. So just above there, sorry, 2685, 2,685 could be a level to watch on the downside. And below that, then we've got this level here, which is 2,600, which is the October low. But I mean, this chart's look like it is. We might get some pullbacks, but broadly speaking, this is a very bullish chart. Anyway, I think that is everything for today. I hope you've liked what you've seen. And if you have, then please do give this video a like. And if you would like to see more videos like this, then please do subscribe.